Good day, ladies and gentlemen, and welcome to the Krishna Defence and Allied Industries Limited H1 FY23 earnings conference call hosted by HEM Securities. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question may enter star and 1 on their touchtone phone. To remove yourself from the queue, please enter star and 2. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ramadhin Rani from HEM Securities. Thank you, and over to you, sir.
Thank you very much, Michelle. Good evening, ladies and gentlemen. Thank you for joining the Krishna Defence and Allied Industries Limited H1 FY23 earnings conference call. Joining us on the call today are the senior management members of the management team, Mr. Ankur Shah, Managing Director, and Mr. Piyush Patel, CFO. We will commence the call with the opening thoughts from the management, post which we will open the forum for the Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature, and the actual results may vary from forward-looking statements. I would now like to hand over the call to Mr. Ankur Shah to commence by sharing his thoughts on the performance and strategic progress made by the company. Post Mr. Ankur, Mr. Piyush will share details on the H1 FY23 financial performance. Thank you, and over to you, sir.
Thank you, Mr. Rane. A very good afternoon to all of you, and thank you for coming for the investor conference for the half-yearly results for FY23. Some of you already know about our company, but some of the new or potential investors may not know in detail about who we are or about our company. Hence, I will take a few minutes just to talk about myself and the company to begin. I am Ankur Shah, Managing Director of the company. I'm a production engineer from Father Agnew College at Bandra, and I joined the company in about June 2000. The company was actually started by my late father in '97, who himself was a double engineer in the fields of mechanical and electrical. We had humble beginnings to start off. We were about 12 employees and 2,000 square feet shade to right now over a 200 plus strong team and a factory spread across 100,000 square feet. We have a registered office in Mumbai and have 2 plants in Gujarat near Baroda, one in Halol where we manufacture equipment for the defense, and another unit in Kalol, which is about 10 kilometers away, where we manufacture equipment for the milk collection and procurement. Again, I know, some of you are always asked this question, when I've met a few investors in terms of what is the connection between the defense and the dairy industry. How can a company be doing the same, a company be doing two sparse segments that are there. And I always say the connect between both of them is engineering and technical skill. So we started in '97 as a manufacturing company for supplying stainless steel milk cans, milk cooling tanks, and the milking machine in the dairy in the dairy segment. So traditionally all engineering products. During the journey, we came across an opportunity to develop and supply a particular product for the Indian Navy, and we grabbed that opportunity with both hands. So one of our prime products that goes to the defense right now, as we call it, is the bulb bars. Bulb bars basically are shipbuilding steel sections used by the Indian Navy for stiffening of the hull of the warships. It has a very unique profile which ensures the strength to weight ratio is 3 times of normal structural steels like angles and channels, due to which the weight of the ship can be reduced. As we all know, a lighter ship adds to several features like better speed, I can take more ammunition, more people on the ship, and most importantly, a great stealth feature. We were the first in the country to develop these bulb bars in partnership with a DRDO lab called Defense Metallurgical Research Laboratory, or in short known as DMR in Hyderabad. We were also awarded the DTA award in the year 2014 by Prime Minister Shri Narendra Modi for a development of these bulb bars, because prior to our development, the Indian Navy was importing these steel sections from Russia. We have successfully supplied these bulb bars to all the shipyards that build ships for the Indian Navy, which include Mazagon Dock, Garden Reach in Kolkata, L&T, Cochin Shipyard in Kochi, and Goa Shipyard Limited in Goa. Post a successful supply of bulb bars for the surface ships, we also got certified for higher strength steel bulb bars, which are used for critical applications of the Navy. Just a clarification here, Indian Navy does not procure bulb bars directly from us. So the Navy releases a tender inquiry for a type of a ship, say a frigate or a corvette, and we have all the shipyards bidding in for it. Whichever is the shipyard that has quoted the L1 price, they will back the order, be it Mazagon Dock or GRSC, CSL, so on and so forth. Once they are given the order to start building the ship, they would in turn place order on the steel bulb bars on us, which will start their construction of ships. So I thought I'd just explain that. In the past, couple of 6 months or something, we've added 2 new products in the Navy line, as we call. It's called the ballast bricks, which have a very special property. It has no magnetic signature. These are again used for critical naval applications. And the other is specialized weld consumables, which are used again for welding of steel at critical platforms for the Navy. We've always had been in the hunt to add new products that we could indigenize and supply to the Indian Navy, and as we move forward. We are constantly in touch with the various labs of DRDO and already in consultation to build new products as we move forward too. We started a new segment of Homeland Security in about 2020 or that is there, but unfortunately COVID hit in and 2 years was a bit slow, that is there for us. But now we have started to see good traction on that front also. Recently, I'm glad to share that we signed an MOU with IIT Bombay, one of the wings of IIT Bombay, for development of some products for internal securities. With the aggressive warship procurement plan of the Indian Navy, we see ourselves in a good spot to bag some good orders in the near future, which would add significantly to our revenues as we move forward. We as a company have set a target to grow our revenues at the rate of about close to 40-50% year on year for the next few years, keeping in mind the Make in India, the Atmanirbhar program, and the indigenization program of the government. This is in brief about me and the company. I now hand it over to our CFO, Mr. Piyush Patel. Over to you, Piyush bhai.
Yeah, thank you, Mr. Ankur. Good afternoon, ladies and gentlemen, and welcome to this H1 FY23 earnings update conference call of the company. In financial highlights, starting with the total revenue, for H1 FY23, total revenue of the company stood at rupees 19.55 crore versus rupees 20.72 crore in H1 FY22, marginally dipped by 5.64%. The company reported EBITDA of rupees 3.22 crore in H1 FY23 as against rupees 2.98 crore in H1 FY22, thereby showing a growth of 8.09%. And EBITDA margin percentage have increased from 14.38% in H1 FY22 to 16.4.7% in H1 FY23. Now coming to the net profit of the company, it is surged by almost 34.26% to rupees 1.64 crore in H1 FY23 as compared to rupees 1.22 crore in H1 FY22. And PAT margin have increased from 5.9% in H1 FY22 to 8.39% in H1 FY23. Once again, thank you all for this conference call. Now, I'm handing over to the moderator for proceeding with the Q&A session. Over to you, moderator.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask a question. We have the first question from the line of Shubham Jain, an individual investor. Please go ahead.
Hello, sir. Good evening.
Yeah. Good afternoon.
Good afternoon, sir. Sir, first of all, congratulations for your order. Recently, you have been updated to the exchange. And sir, my first question is, what is the reason for lower contribution of dairy business to the revenue? So, can you suggest something?
Yes, sir. I didn't get your name though, but
Shubham,
Shubham, sir. Yeah. Sir, unfortunately, the lumpy skin disease has hit India, as we all know. And one of the segments in the dairy that we deal in is dairy farming, the milk procurement. So our product is the milking machine and the related products. Because of this unprecedented thing happening, it's like a COVID happening for the livestock that we have. There has been severe panic amongst the small and the dairy farms that are there due to death of the livestock. That's the reason we are seeing a dip in the dairy segment as we talk.
Okay, sir. Sir, my next question is, can you share the detail about the order book, order in hand or something pending revenue to book? Yeah, like just you have mentioned your earlier order. So we have some update about the upcoming orders or anything which you provide to us.
So I'll just in order to answer in detail, our current order book is about close to 42 odd crores, out of which about 39.5 to 40, if my figures are correct, is towards the defense sector, and about 2 odd crores are towards the dairy sector. In line with, as we move forward, we are in advanced stage of getting few other purchase orders in the next month or so, which will be updated on the exchange. And we are all set to close our FY23, the remaining 6 months, as we had projected earlier, with a 40 to 50% growth in revenues from FY22.
FY20, 40 to 50%, right?
Yes.
FY23, yeah. Okay. Thank you, sir. I will get back to you again.
Yeah. Thank you.
Thank you. We have the next question from the line of Nikhil Chandak from JM Family Office. Please go ahead.
Yeah, hi. My question was, you mentioned in the opening remarks that we could grow at say 40-50% for the foreseeable future. I was just seeing that our asset base right now is roughly around 13-14 crores. And what I wanted to check is, what capex would you really need to do to kind of, get to that growth number of 40-50% over the next, say, 3-4 years? Is there some significant capex which will need to be done, or the current asset base should be sufficient to, get that kind of top line growth?
Right. Thank you, sir. Interesting question. What I wish to say is, in the last 3 years, we have done capex that are there. From what my memory serves me correct, again, sir, I'm not a finance person. I'm an engineer. I head the business, so I will leave the numbers to Piyush Bhai. He'll confirm that. But from what I know is, we've invested significantly in the range of about close to 5 to 7 crores in the last 2-3 years to build up and ramp up our capacity. The last 2 years have been slow in terms of no new naval projects coming up. So we were using this to ramp up our capacity, because we know the plans that the Navy has. And, the projects that did not come for the last 2.5 years, all are likely to come in. So there is likely to be a spillover effect, and we are expecting good growth to come in our segment. So we've built up our capex to be able to reach to that level. And to put it forward, currently our capacity utilization is about 30-35%. And if we have to achieve the growth for the next 2-3 years, we have done the capex to be able to achieve the revenues. As we move along, I might be doing capex investments, but those will be for automation or mechanization. That amount will be in the range of about 1.5 crore or that is there. It's not going to be, I'll have to set up a new line as we move forward. That would be probably after 3 years or something. Nothing significantly as I see for the current product range that we are building.
Understood. Okay. So in that case, then your asset turns are extremely high. What would be like a good asset turn to note for the company? If you say that we wouldn't need any capex, or incremental capex, and whatever we have is done in that 14-15 crores.
Yes.
I think then the asset turns becomes quite significant. Is that understanding right?
Yes, the understanding is right. Sir, again, what we have done in the last 3 years, because, the last 2.5, 3 years, the COVID time that is there, and post that, we have tried to strategize our production capacity. So when we are building a product for the Navy, these are steel sections which require several processes as we move forward to. What we have done is we've developed a very good vendor base where the non-critical jobs, like simply something like a plate cutting, which we are doing in-house, shot blasting, painting, which are very regular processes, we are not doing in-house. We are outsourcing all of them. We've developed vendor base in and around our factory so that we are doing the high value addition jobs and not doing so we've not had to invest in very standard machineries like cutting machines and presses and all that. That we've tried to outsource, and we are doing the critical part. Hence, the ratio in terms of the asset to the turnaround that you're talking, it seems like that. If you see our labor job, and that has been increasing because we have tried to outsource the non-critical jobs outside.
Understood. Perfect. Great. Thank you so much. Thank you.
Right. Thank you. I hope I've been able to answer you correctly.
Yes, absolutely. This is
Right.
understood.
Yeah.
Thank you.
Thank you, sir.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and one now. We have the next question from the line of Chinmay Bhandari, an individual investor. Please go ahead.
Hi, sir. And congratulations for good numbers. And I have a few follow-up questions in the last con call. So in the last con call, you mentioned that you will be working on you were working on 2 new defense products, and you were working on some special kind of ammunition for Indian Army. So what's the update on that?
Right. Great, Chinmay. I remember you from last time, and so if I heard you correctly, you asked about the 2 developed products and the armament and the ammunition we're talking about, right?
Yeah.
So out of the 2 products, one of the product is type tested and approved, that is there, which is the Bukhari. And fingers crossed, if everything goes well, we should be bagging an order for the same, but too early to call. For the second product, it's under development at our end. Once that is done, we'll be presenting it to the DRDO lab for taking it forward. On the third product that you said on the ammunition, it is still work in progress. It's still work in progress, and we are also trying to get some technology from an international company to take it forward. But still early days to call to move forward on that one. But it's work in progress. Defense products are pretty critical and involve high level of engineering and technicality. So it takes time to build up, right? A few months is too less. It takes at least a year plus to develop a product and to be able to successfully present it.
Mm-hmm. And sir, in the last phone call, you said that you were expecting an order book of around 18 to 19 crores, but currently your order book is already of 42 crores. So can we see some more increment here, or is it sufficient order book for the financial year 23?
No, as I indicated the first question, we are expecting we have a couple of orders which are in the final stages, which should be coming up soon. And I will put it up at the exchange. We try to follow the policy of putting up at the exchange the moment we get a large size order. So you guys will be updated as we move forward.
Okay. And so my last follow-up question is, you said that you were trying to do some international collaborations after the ban from import from China. So were you successful in doing those collaborations, or we are still in the talks?
Oh no, we are still, but it's still in talking terms. We have done the initial round and the initial paperwork, but it's still work in progress, sir.
Okay. And so my last question is, in this half year's result, we have seen some increase in trade receivables. So if you can tell me the reason why is that?
I'll have to pass that question. I'm sorry. Sir, Piyush, would you be able to answer that one? I'm not knowing the numbers, please.
Trade receivables have gone down significantly, if you can see. So if you look at the overall balance sheet, you can see that the receivables from our customers have increased and total debtors have gone down to around 7.28 crore, right? So that fund we have utilized in repayment of our trade payables, and some amount has been utilized in inventory. So this is our main policy of managing the working capital.
Okay.
So you must have seen the trade payables on lower side, right? What we are talking about.
Yes.
Yeah.
Okay, sir. That's it from my side, sir. Thank you.
Thank you.
Thank you. You may please press star and one to ask a question. We have the next question from the line of Anshi, an individual investor. Please go ahead.
Hello.
Yes, ma'am.
Am I audible, sir?
Ma'am, you're sounding too low. I would request you to please
Hello.
use your handset.
Hello.
Yes. Please proceed.
Am I audible now?
Yes.
Yes,
ma'am.
sir. Hi. I just have two questions. First is that how do you foresee the commodity pricing going forward and its resultant impact on the margins?
Right. And your second question, ma'am?
Sir, second question is you had mentioned about reducing dependence on workforce in the last call. So I would like to understand the progress on that front as well.
Reduction in?
Reducing dependence on workforce.
Okay. I'll take the first one. You're right that the commodity prices have been fluctuating. However, in our case, because these are all high value items, the ratio of the raw material to the finished product, is not very high. So it constitutes only about 30% depending on the product to product. So, even, a 10% plus minus in the commodity price does not affect significantly to our margins as we talk. However, since these are all contracts that have to be fulfilled in 6 months or 8 months, we procure the raw material at one go. So we are insulated in terms of any incremental things that are likely to come as we move forward. So that's how we are protecting any commodity price fluctuation as we move. And to reduce workforce, I don't remember on that one, but what the idea is to utilize, to become more efficient with the workforce that we have. So that's what I said. We will be doing investments in terms of mechanization, jigs, fixtures, and tools, and trying to do semi-automation such that we are becoming more efficient in the current workforce. In which way increasing the productivity.
Okay, sir. Okay. Thank you.
Yeah.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and one now. You may please press star and one to ask a question. We have the next question from the line of Shubham Jain, an individual investor. That would be a follow-up question. Please proceed.
Hello. Sir, my next question is, as I'm seeing the current number, H2, is slightly down from March, यानी 29.20 करोड़ से, I guess अपने जो numbers हैं वो 19.55 है. So sir, is this for a particular H1, H2 reason, or maybe the YOY comparable? I want to say is a seasonable business or something is H2 will be better from H1, yeah, is like a seasonable sale which come down number. So can you please explain the number?
Yes, a very valid question. Generally, all the defense orders that are there all come in about quarter to quarter. It all comes in the latter half of the year. So traditionally, for the past few years, you will always see that the last 2 quarters contribute significantly to the revenue that is there, vis-a-vis the first 2 quarters. They're a bit quiet because the funding goes, and once the funds are allocated, so April, May, June, usme nikal jata hai. This is a standard thing that comes with defense. At least that is what we have faced. So always the H2 is heavier than the H1. This is our standard pattern.
And so second thing is from operating margin, and we have seen is a very good growth numbers in operating margins. So sir, can you explain what is the main factor for increasing the margin for this quarter, for this H1?
Yeah, I'll give you an answer on the business side. If you want a more financial answer, I'll ask Piyush Bhai to finish and fill in after me. So, as this half year, we have our defense sales has increased. Although the total revenue, there's been a slight dip by as about close to 5%, but our defense revenues have increased. Hence, and defense products have a higher margin vis-a-vis the dairy segment. That's the reason overall combined you're seeing a higher operating margin. Piyush Bhai, would you like to please add on this?
Yeah, yeah. What Ankur Bhai said is the correct. If you look at the sales mix, then you will come to know that defense vertical contribution in total revenue has increased up to 77% out of the total revenue. And in defense sector itself, higher margin products contribution has increased compared to the last H1 FY21. If you see the product mix, and in product mix, if you look at the dairy and defense, defense product margin has contribution has increased. In September 21, out of the total revenue, manufactured product revenue was only around 14 crore, and rest of the other products. In H1 FY22, it has increased to around 17 crore. So this is the main reason why our operating margin have increased to a great extent.
Okay. And sir, my last question is, do we have any dividend policy in near future? Because I am an investor. So I want to just know if we are planning to announce a dividend or some dividend policy, so it will be good for us.
Sir, when we are likely to announce, you guys will be the first ones to know that we are going to be announcing a dividend that is there. We are growing right now, and we are here in for the long run. We want to ensure that all the people that are associated with us, the shareholders, all of them are benefited. So that is definitely on the cards. But to put in a number or something, I will not be. It's too premature to do it right now, sir.
Okay. Thank you so much, sir. Thank you so much. Good luck. Thank you.
Yeah. Thank you.
Thank you. Participants may please press star 1 to ask a question. You may please press star and 1 to ask a question. Anyone who wishes to ask a question may please press star and 1 at this time. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Rabatin Rani for closing comments. Over to you, sir. Mr. Ramadin Rani. Sir, we cannot hear you. Kindly unmute yourself and speak, please. Sir, any closing comments, Mr. Ankur Shah, sir?
Yeah, I thank all the people who have joined, all the investors and shareholders who have joined in the con call. I appreciate the love that you are showing for a company of our size, and we assure you that we will entrust the faith that you have put into us, because we are growing and we are very excited about the future, keeping in mind how fast the Navy is going to grow. So thank you, and please continue to support us. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of HEM Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.